The British pound found some strength post-Christmas as we start to elevate back towards that 132 level, which should act as pretty good resistance. Recall the post-election going back to early December, the post-election range, we hit 135 shortly after the election and then dipped very quickly down to 129. So kind of getting back to that 50% of that short-term range that we're talking about here should add some modest resistance. Again, we have year-end coming up, so things may get a little wacky or quiet. They may be very quiet, but at the end of the day, it won't be till after the first year that we start to see any real breakout moves. But certainly garnering a little bit of bullish momentum as we trade off those lows that we saw really just last week. A lot of that probably comes off the heels of the newly appointed Bank of England governor, who's going to be taking over from Mr. Carney. Mr. Bailey's got a lot of central banking experience. Doesn't seem to be a real standout with any radical thinking. Will probably stay in line of what we've seen from Mr. Carney since 2013 when he took over the Bank of England. Likewise, I think that this whole discussion of the transitional period post January 31st, when the UK Brexit does take effect, has become into a lot of question. A lot of the reason why the pound sank as it did post-election, I think at this point you're getting a lot of back and forth talk, and you're going to continue to get a lot of back and forth talk with the EU wanting to kind of recalibrate the discussions maybe mid-year and talk about the transitional period maybe extending. That's not what Mr. Johnson wants. He wants to get things done today, get them done quickly, and move on. And right now that seems to be finding favor as it did in the elections. And at this point, I think as long as they remain open-minded on both sides of the table, things should get done. But it's a very key negotiation that will happen. Obviously, trade very much the center of that discussion. And lastly, I think at this point, from the Bank of England standpoint, the Brexit issue will continue to be sort of the thorn in their side. Mr. Carney was able to manage by holding rates steady when a lot thought he should be cutting rates, and that could be something that Mr. Bailey now has to deal with as he enters office in March. As how will he react, or how will he handle the whole Brexit mess? At this point, it seems that they're going to continue to remain cautiously optimistic that things will get done, and will wait for the dust to settle before they start cutting rates, or before they feel they need to have to start cutting rates. But some are now speculating that there could be a rate cut as soon as first quarter. At this point, it remains very much up in the air, similar to what we're seeing here in the States with our Fed, with basically keeping everything data dependent. Over there, it's a little bit more of an inflation itch than anything else, but I think in growth. But I think at this point, all central banks want to keep their hands as far back from that cut button after what we saw here in the States in 2019 and what we're seeing around the globe. They want global growth to get its sea legs back under it so they don't have to stimulate it. But at this point, there could be some more necessary tweaks in what we'll call the central bank model that we've seen come back, sort of similar to what we saw back in 2008 and 2009 when it was just sort of cut. And at this point, Bank of England remains in that same sort of phase as our Fed does. So moving forward, the pound is starting to get a little bit of more bullish momentum. I think 132 will be an obstacle that they probably have difficulty getting through before the end of the year. But at this point, it seems that steady as she goes, as long as Brexit talks remain positive and optimistic, you could see a similar reaction to what we saw between the U.S. and China. You start to get those trade talks moving forward. That really elevates and pushes through a lot of risk assets and continues to keep the central bank's hands out of the cookie jar, at least not deeply in the cookie jar as they have been. So right now, hovering just below 132, but look for that level to hold as we head into year end.